Hey guys, this is Rafi, the Endgame Investor. We have a new guest in our series of interviews in the gold and silver community. This week is Keith Weiner of Monetary Metals, and he has a very interesting business in terms of remonetizing the precious metals, which you will hear all about. But first, as you know, I want to get into how Keith got into the gold and silver movement or industry in the first place. Hear a little bit more about him, get more of a personal touch. So, hi Keith, how are you doing?
Hey, Rafi, how are you?
I'm actually doing better than most days. I feel a little bit of a wind of liberty sweeping the world after, 2 years of craziness. Things are loosening up, so I'm feeling a little bit better than usual. How are you?
I'm doing good. I agree with you. I think there's an awful lot of people that went along with lockdown as a policy that are kind of sick and tired of it. And that's
Yeah.
a good sign and a refreshing breath of fresh air.
Yeah, I'm sick and tired of more than just that. Well, you can see on my shirt,
Oh,
I
not
have two things.
complaining.
I will not comply, meaning I won't comply with any of this stuff that you know what I won't comply with. And this is Hebrew. Over here it says ani patur. It means I am exempt. The mask law in Israel is that you have to wear masks unless you say you don't have to wear masks. And so I have a sticker on my shirt that says I don't have to wear a mask, so I don't have to wear a mask. Never gotten a ticket. It works. And people just got to be brave enough and say it doesn't apply to me. The law does not apply to me. Why? Because it's stupid.
Very cool.
Anyway, so Keith, how did you? I explained my story on a previous interview, on the first interview that I did. Basically, Ron Paul got me into the movement 10 years ago. I was already heading in the libertarian direction, but all the economic the basic economics logic questions that I had as, like, a 5, 10-year-old kid, meaning how can prices always rise? What does that mean that something always goes in the same direction? It's going to lead to an explosion. This doesn't make any sense. And then I kind of put the question away and didn't ask it for another 10, 20 years. But then Ron Paul answered all these questions. Yeah, the economy's not supposed to work this way. And then I started looking into the monetary system, and everything clicked into place. How is it with you? How long have you been involved in sound money? When did it suddenly dawn on you that the system is all corrupted? And when did you decide to do something about it?
So interesting set of questions. I was introduced to Ayn Rand when I was in university in 1986 and devoured everything she wrote, considered myself an objectivist after that. Was, generally aware of gold. Obviously, I'd read Greenspan's essay, which he wrote in 1966, about how gold is the thing that protects you from the ravages of government abuse and so on. And hadn't really been active in thinking about money as a advocacy issue or as anything else. I was your classic computer nerd. I just wanted to, like, even in junior high and high school, every free moment I hung out with the computer, and I was making the computer do really interesting things. And ultimately went to major in computer science, where I kind of feel like I got everything I could at the undergraduate level, and then dropped out to do some programming professionally, and then build my own software company, which is a company called Diamondware that I founded in 1994. Built that up, developed some really cool technology around 3D voice for real-time communications, which is now today becoming big, but it was a crazy out there idea back then. Sold that company to Nortel Networks. We were the last acquisition Nortel ever did. The acquisition closed August 19, 2008. So right before the world went over the abyss, right before Nortel went over less than 2 weeks after that, the Nortel CEO went out to Wall Street and said, the wheels are coming off. It was like September 2nd or something. It was just completely surreal. I felt so bemused just sitting there. So they fired the CTO on September 2nd, and like 15% of the company. I felt like I had the most secure job in the company. They had just worked hard to put in this retention for me and everything else. Now, my boss's boss is getting fired. Everyone's getting sacked. And at first it was like, okay, this is weird, but whatever. As things continued to unfold, that was kind of the moment that you described, like nothing makes any sense. How can the world be going over the abyss, which it was at that time, and everything that they said on TV, and even everything they said in, we'll call it more, erudite places like the Wall Street Journal, Investors Business Daily, Financial Times.
Mm.
None of it really got to the root of it. It felt like everybody kind of started in the middle and kind of did Brownian motion in circles. And so I just became more and more interested. First, just figuring how to protect myself. I had worked 14 years to build this company, had my liquidity event, didn't want to lose everything in some crazy thing, and came across the writings of this old Hungarian professor named Fekete.
Oh, Antal Fekete, yeah.
Yes.
Yeah.
So
He just
ultimately,
passed away recently, I think.
he did in October.
Yeah.
I I was just interested in pursuing, like, where's the root of this? Like, how deep does this unravel? So he announced he was doing a course in Hungary. So, I had plenty of vacation time coming to me, and I certainly could afford to fly. So I went to Hungary to meet him. No intention really of becoming a student, just wanted to hear what he had to say. Anyway, kind of signed up and did more and more of that. I started writing essays, which I shared with my professor, who became my professor. And then at some point he said, well, you have enough here for a dissertation. I kind of laughed that he snookered me with that one, because I think that was 6 pages in that particular paper. The dissertation was ultimately 126 pages.
Wait, so hold on 1 second. This is interesting. So I also got introduced to Antal Fekete in some kind of gold backwardation article that got me to understand basically the mirror image connection between gold futures markets and why they shouldn't be, because gold should be the money that futures are priced in. Sort of this like funhouse mirror monetary universe that gold and silver futures are. And that's how I got introduced to Fekete. I'm not even sure how I found him. But you're saying you weren't a student of his, but you were influenced by his ideas and brought his ideas to your professor when you were doing a doctorate?
No. He became my professor. I studied under Fekete.
You studied under Fekete?
Yes.
Wow. Okay. That's really cool.
Ultimately, he, in his little new Austrian school, awarded me a PhD, which isn't accredited. I could never get a job with that degree, which is okay, because that wasn't my intention anyway. Entrepreneurs don't care very much about degrees, but the work was real, and it was a 126-page dissertation, which I put out there, and I addressed gold backwardation a lot in my dissertation.
Whoa, I'd love to read your dissertation.
I'll send you a link to it. It's
great. I'll totally read it. This is what I'm into.
on my personal blog site. I think the most important thing that I did was I used the calculus of spreads to prove that whenever the government interferes in markets, and there's a lot of different things that they can do, and they always say that they're improving outcomes. That's always the propaganda. But no matter what they do, set a price cap, a price floor, prohibit something, tax something, subsidize something. I went through, I think, slightly under a dozen different cases. They always reduce coordination amongst the productive people in the economy. They always interfere with coordination and cause discoordination. And I proved that by studying spreads, which is a more black and white way. I think that's one of the objections that mainstream economists have to the Austrian school is, you guys are a little bit, less formal, and, because we want to look at, what's called a priori knowledge and praxeology. And they say, well, that's not, that's not formal, that's not rigorous. Well, here's a more rigorous, look at things. Anyways, I also talked about backwardation. But anyway, so getting back to my journey, I sold my company. I'm sitting here thinking I'm far too young. At that time, I was 41 years old, far too young to just retire, thinking about what's my next venture. In a normal world, it would have been another software company. I had a team who followed me to hell and back at Diamondware. They're like, when's the next gig? We're ready. I had access to capital, great advisors. We had tons and tons of ideas. We were brainstorming. But the more that I got into this, the more I said, there's something very, very wrong with the monetary world. And I've got to make a go at trying to fix things. So I want to build a business in the gold space, not just another software company doing another clever, software technology. And that's what kind of pulled me to, to found Monetary Metals to take this path.
Wow. Okay. I had no idea you were a student of Professor Fekete, and I don't know that's very interesting. So about about monetary metals. Just, I guess, briefly describe, I'm saying, like, what is it you're trying to do that's different from, like a gold and silver or coin salesman or someone trying to just introduce the ideas of sound money into society? What monetary metals is doing, how, considering that things are becoming extremely unstable in the financial and monetary universe, how does monetary metals stay together, and the glue keeping the company together? How does it survive this incredible crash that we're about to experience, maybe a year or two from now, or something close?
So a couple of different questions there. When I, during the time that I was studying with Gettr, he of course invited, so there were two of us that ultimately were granted PhDs in that program. And as far as I know, that was it.
So you're one of only two. You're one of only two of Gettr's PhD students.
As far as I know, there were only two. So anyways, he asked me to lecture at a lot of these courses. So one of the slides I used to use, and I was talking about this idea of gold circulation in a gold standard. And I think if you ask the average gold guy, well, it usually comes as a confrontation by the anti-gold people, and they say, well, there's not enough gold to have a gold standard anymore. That's obsolete. And then the gold people will typically get a little defensive about that and say, it's just a matter of price. And then at that moment, if you ask them, well, see, do you think there's some like magic price at which if gold hits that price, then it will spontaneously begin to circulate? And then they'll kind of defend that proposition, especially if they're kind of pushed into it or backed into it. But there is no particular price. I mean, the more it goes up, the more that, if anything, gold is going to disappear deeper into private hoards. So there's a slide I used to use talking about this concept that the interest rate is the regulator of flow. And the slide was a picture of a plumbing system. And, so you have this pipe, right? And then there's this, I think it's called a check valve, which is this little lever arm, this little thing that's welded into the pipe. And then if here's the pipe and the lever arm is parallel to the pipe, then the water flows, and it rotates 90 degrees. If the lever arm is perpendicular, then the water will not flow.
Right.
And we talk about that. So that's the interest rate. If the interest rate is zero, suppose you had a working gold coin standard where coins are actually circulating in the economy, and then for some reason or somehow the interest rate went to zero. Well, there's no longer any way for wage earners to save towards retirement by depositing those coins in a bank and getting interest. So what they have to do is pick those coins out of circulation and put them under the mattress. They have to revert to hoarding, which is what happens during dark age, periods. And I use that word dark age very, very deliberately. And so they would pick all the coins out of circulation. And even if gold had been circulating, it would seize up and cease to circulate as a result of that, because people have, the only alternative to earning interest and putting your coins into the market is to hoard and save that way by pulling them out of the market. So all the gold would disappear, which is, of course, exactly where we're at today. I mean, yeah, they made it illegal in 1933, but everything was re-legalized in 1975. Gold clauses were re-enabled in a separate law. I don't know if it was 1975 or 1977, but somewhere around there. So we're in this period now of 45 years where there's no law that stops anybody from using gold. I mean, there's legal tender, which is a different thing. And the tax code is certainly highly annoying. But, we have all these gold coins. And in fact, thanks to Ron Paul, in 1985, the U.S. Mint was required, beginning in 1985, the U.S. Mint is required to produce as many gold coins as whatever the market wants to buy. And so we have, no lack of gold coins and no real legal regime that stops it, and yet gold won't circulate. And the key is the interest rate. So I think monetary metals sort of begins life a bit differently from most other gold companies. It began life with an economic theory. That as I kept thinking about that over and over and over, and I'm like, this is the interest rate is the key. Then the other thing I was thinking about a lot was there's a quote from John Maynard Keynes that most gold people would be aware of when he says, there's no surer way to overthrow the capitalist order. I just have to put there and say, that means civilization.
Yeah.
Capitalism, to the extent that elements of capitalism are permitted, that is the extent to which we have civilization. And to the extent that capitalism is completely stamped out, which was Keynes' goal, he was a socialist, then what you have is barbarism, brutality, misery, and ultimately collapse and starvation. The non-capitalist lack of order cannot feed the people even. So there's no surer way to overthrow capitalism and civilization than by debauching the money. And most people assume he means inflation. And then at the end of the quote, he gives away why I don't think it's inflation at all. He says, by engaging all the hidden forces of economics, I'll get back to that in a minute, in favor of destruction, and not one in a million can diagnose, what the hell is going on. Now, I'm old enough to remember the late 70s. I was 12 years old in 1979. Everybody was talking about inflation every day. It was on the nightly news 5 days a week. They were talking about consumer price index, unemployment, the so-called misery index, which is CPI plus unemployment. Everybody talked about it every day.
That's what's happening now.
And so unless Keynes was stupid, it's not true to say that not one in a million could diagnose it. If that was the problem, everybody would be diagnosing it. No, I think what he meant, and separately he writes about driving the interest rate to zero. It destroys kills the rentier, which is the person who lives on interest on savings, whom he called a functionless parasite. He said capital becomes plentiful and there shouldn't be a return on it. He's very clear, he wants interest to go to zero. The process of driving interest rates to zero is the process of creating an endless bull market in assets. The asset price is the inverse of the interest rate because of the net present value. So he's saying drive asset prices to infinity, and nobody's going to notice how the world is being destroyed because everybody loves a bull market. How do you tell people there's something wrong with the economy when stocks are up and real estate is up and antique Ferraris are up and Picassos are up? How do you tell somebody this is actually defective? It's impossible. You can write about it until your fingers fall off, which I've almost done, and people don't, really get it.
Well, if I can interrupt you for just for 1 second, this reminds me of an idea that I didn't come up with, but I connect and hold on to your thought because you should continue what you were saying. But when Keynes says that he wants to bring the interest rate down to zero, right? I'm an Orthodox Jew, so I always go back to biblical thought, and I read the book all the time. It goes back for me to the Garden of Eden, right? What is 0% interest? 0% interest. If 0% interest rate is natural, then that means that there's no time preference. If there's no time preference, the implication is that humans are immortal. And if Keynes wants to say that humans are immortal, he's violating the story of the Garden of Eden. He's violating human mortality. He's disobeying God's natural law that humans die. It's impossible. So just going back to the basic moral stories of humanity, this is morally and physically impossible. You cannot have an interest rate of zero. And when it does, and when you do force it, you'll destroy society. It's simple as that.
That's right. And, when the way I write it, I usually try to be careful with my phrase. And I talk about things like using the government's debt paper as if it were money and imposing an interest rate on the market that is not to the preference of the market participants. So they can't change natural law, but they can force people to act as if natural law had changed, at least in some respects, and at least for some limited period of time. So anyway, so I keep thinking about getting back to that, engaging the hidden forces of economics. And so today our term for hidden forces of economics is incentives. And I think, economics has done a lot to elucidate, make them less hidden. I mean, people operate based on incentives. If something's profitable, that's what you do. So Keynes is saying, make it profitable to consume capital, make it profitable to eat the seed corn. And, by driving interest rates to zero, people will borrow to buy that asset off of you, and you're eating the borrowed, you're consuming the borrowed savings. And so nobody wants to be the prodigal son, to use a biblical analogy, but Keynes's mad plan turns us into a prodigal society where, we're liquidating assets rather than operating them to generate income. We're liquidating them to generate capital gains and spending essentially somebody else's capital. Well, that is a finite terminus. When you run out of capital, if you eat the seed corn, at some point you run out of, the bins run dry, and then you have this problem. So I was thinking, what about engaging the hidden forces of economics, not in favor of destruction, but in favor of a return to normalcy and a return to sanity. And
Nice.
so that was kind of the origin of monetary metals, thinking I want to fix this problem. I think I understand the root of it. I've done this PhD in essentially monetary science. How do I approach this? And the idea was, and as I said earlier about the interest rate as the regulator flow, thinking about now the interest rate as the hidden incentive or the hidden forces of economics, the incentive per Keynes. What could I do? Well, I could offer interest on gold, and for this purpose, not because interest on, is interesting to me per se. As an economist, as an academic, and I don't really consider myself to be an academic. I consider myself to be an entrepreneur, but yeah, okay, that's interesting academically. But what's the point of all this? The point of all this is to try to reverse this, destructive juggernaut before it finishes eating us alive. And so that was the birth origin of monetary metals. We'll pay interest on gold. So how do we, what do we do differently from, the gold coin dealer? Well, we're not really selling gold. We're saying deposit it and get interest on it. And why are we doing interest on it? Because that it provides all the right incentives and ultimately can bring gold to circulate into the market. And I'll just give a really simple little example. A lot of companies have, gold companies have a feature where you can spend your gold. And I get it, and there's a business there, and there's a lot of people who, want to engage in that. But essentially, it's no different from Bitcoin and no different from stocks or stonks, which is you buy something, wait for it to go up, and essentially you're selling it to the next guy. So you fork over your capital to somebody to buy the asset, and you wait for it to go up, which means someone else is forking over even more of his capital to you than what you had forked over to the previous guy. And so assuming you take your original capital out, that gives you, a bit of someone else's capital to go spend. Thus my analogy of the prodigal society. And then, people can do that in gold or anything else. But we kind of have a different idea, which is people really shouldn't be spending their capital. And of course, given everything I've written about the failing dollar, it isn't really gold that's going up, it's the dollar that's going down. Yeah. Imagine you're on the deck of a sinking ship, and it's also tossing in stormy seas, and you see a lighthouse, and you're like, why is the lighthouse going up and down, but mostly up? It's not going anywhere. It's just you're sinking. And so anyway, so they have this feature where you can spend your gold, which is spending your capital asset, which obviously people do when the price goes up. But now imagine people are earning interest. They could spend the interest. And that is a normal thing to do, that people in a free market, normal people in a free market where the economy works, is you have investments, those investments generate income. The income is there to spend. You shouldn't spend the investment capital, but spend the income. So anyways, the more people that are earning interest, that's just one little microdynamic of how gold can, really come into the market as a spending currency, and not just as a buy the gold, which of course has friction, right? So when you buy gold and then you pay somebody the gold, and then of course they have to sell it, or you sell it to pay them cash. There's a bid-ask spread, in both directions. So there's a 1% or more friction cost to doing that. Why would anybody do that? Well, if gold's going up 10%, then that makes sense. But anyways, if you get paid interest, then you could spend the interest. Mm-hmm. So it begins that process of bringing gold back as first and foremost, a vehicle for finance, and then secondly, a medium of exchange as a consequence and corollary of being used as a mechanism or vehicle of finance.
So when a business does a deal with you to borrow and lend in gold, they're eliminating that friction?
Well, I'm saying that the friction is eliminated to the saver, the person who thinks, I buy gold and I pay, let's say, 1% premium to buy the gold. I wait for the gold to go up, and then I sell the gold to buy consumer goods. So there's, let's say, a 2% loss. What the heck is the point of that other than that gold went up more than 2%? So the whole, use of gold savings to purchase consumer goods is a very frictional process. Whereas if you have gold and you deposit it and you get interest on it, then the spending of that interest is free from that friction. And that's part of the vision of where we're trying to help the world get to.
So two more questions. One is a business question. The other is a Bitcoin question. I'll give you the Bitcoin question first, and then just I guess describe to people watching this how to get involved in monetary metals, what they need to do, who do you cater to. So my Bitcoin question, I think about what was it, the 17th century tulip mania, or whatever mania it is, and you ask a question back then, oh, what good is a tulip? Like, what do you mean, what good is a tulip? Tulip is amazing. It's the best flower ever. I mean, you never find anything like a tulip. Like, what's Bitcoin? Oh, it's a giant Excel spreadsheet of a bunch of recorded transactions that everyone can share. All right, but why is it money? Like, I can't wrap my head, or it's a great record keeping thing, but I can't for the life of me understand why people think it is going to be money, something that is so trackable, when they are the ones that are saying the government is tracking everything. What do you think the government's going to do when it has the whole blockchain? It's going to track everything. Like, it just seems, everything seems so infantile. How do you get these Bitcoin maximalist people to understand that they're out of their minds, basically? I can't really talk to them. I mean, there are people that are trying to hedge, maybe it's Bitcoin, maybe it's gold, fine, but if you want to speculate on whatever, but this whole thing just seems insane to me. Gold is money, and the dollar is a gold substitute, and Bitcoin is a dollar substitute. It's all built on gold. So how do we get these people out of their trance?
It's very difficult, especially while the price mania lasts. It reminds me of an old joke that I heard, which is this guy's at a party and meets this guy who's a psychiatrist. So, oh, you're a psychiatrist. Let me tell you about my brother. My brother's crazy. He thinks he's a chicken. And the psychiatrist said, that sounds really bad. I mean, is he seeing a therapist? And he says, no, we considered sending him to a therapist, but we need the eggs. While it's going up, it's really hard to persuade any, getting back to Keynes and the hidden forces of economics, pretty hard to persuade people. But when our first gold bond matured and all the investors were repaid principal and interest in gold, we did a press release about that. Obviously, that's what companies do. We do press releases to say, hey, look at this cool thing that we just accomplished. And then I wrote an article about that, and I said gold 1, Bitcoin 0. And I compared and contrasted, and I said, here is Coinbase. I don't know if they're the leading crypto company, but they certainly have to be in the top 2 or 3. Public company announced that they're borrowing, they issued a $1.5 billion bond. And so the issuance of this bond proved that, crypto has arrived and crypto is whatever. And I basically said they borrowed dollars, and this proved that crypto is succeeding. Think about that, take as long as you need. And anyway, so then I went on and I said, crypto cannot be borrowed to finance a productive enterprise. Yeah, it can be borrowed to finance various financial arbitrages. You can put up your crypto as collateral to borrow more dollars in order to do something like, I don't know, lever up and buy more crypto. But a farmer or a manufacturer or a shipping company or even a crypto exchange cannot borrow crypto. Why? Because the promise is crypto is going to go up to like $1 million. Who would borrow something that's going to go up? It's suicide. And and Bitcoin can never be stable and therefore can never be borrowable. It would be sheer madness. Compare and contrast to gold, which not only was gold borrowed, I mean, a bond prior to 1933 was a gold bond. It was repayable in gold coin. People didn't want bank credit on the repayment of the debt. They wanted the gold coin in those days. And we're bringing back the borrowing and lending of gold. And here's this bond that we just did successfully that proves the point. Gold is being borrowed today, and we're doing it to finance productive enterprises, not for some financial arbitrage, type of thing. And that's the difference between gold and Bitcoin. Now, do the Bitcoiners get it? I think when you write these things, you're not necessarily writing it for the Michael Saylors, the Spencer Schiffs, and the others that are just, what is his name, Bukele in El Salvador. I don't know you're necessarily going to persuade the people that are the, standard bearers and leaders of the movement. There's millions and millions of people that are watching this of varying degrees of confidence in the scheme. And a lot of them can be reached and persuaded by making clear and compelling arguments, not attacking them and not yelling and pounding your fist on the table, but just saying, hey, that Bitcoin can't be borrowed, never be borrowable. And you make that argument and you put that out there, and it's like, well, they can't really argue against that. They can get angry and wave their hands or whatever, but I think the millions of observers in the audience are like, huh, he made a point.
Yeah.
And then all this ad hominem isn't really addressing the point. And in fact, if anything, kind of indicates touche. Yeah, okay, point scored. So I've written a lot about Bitcoin, of this ilk, to look at the economics of it and say it doesn't work. It's out there and people can focus on that if they choose to.
Mm-hmm. So how do people get involved? How do companies get involved with monetary metals?
So for investors who have gold or want to have gold, we think that we offer the smartest way to own it, because instead of paying to store it, we're paying you to do something productive with it. Minimum account size is 10 ounces, which is retail, but not, it's not super small, obviously. Come to our website, monetary-metals.com. There's tons of material there and how-to video and all that stuff. And then you can call us or fill in a form, or there's different ways to get started. And we've got a team of relationship managers that are, there to be helpful and answering questions and getting people onboarded. If your company is doing something with gold, coin dealers, jewelers, refiners, mints, mining companies, there's a lot of different verticals that are either using gold as inventory or that are producing gold as their primary income. Then also come to our website, give us a call, and we've got a finance product for you that takes the price risk out of the equation. So if you're a jeweler, you need $1 million worth of inventory. The standard way of doing that is you borrow $1 million, you buy the inventory. What happens if the price of gold goes down 10%? Now you have $1 million debt that you still owe, but you have a $900,000 worth of inventory. You could be bankrupt.
Right.
And by leasing the gold from us rather than borrowing dollars to buy it, we take that price risk out of the equation, and that's the that's the virtue to the other side of the equation.
Right. All right, Keith. This was it was great having a discussion with you. I might sign up with Monetary Metals myself in the near future.
Awesome.
Thank you for your story, and I'm honored to have met one of only two of Professor Antal Feketti's doctoral students.
All right. Well, nice to meet you as well, and thank you.